let's get into some of your high conviction ideas, your pro picks. Pro Picks is brought to you by ATB Financial. With over $100 billion in assets, ATB Financial is powering possibilities for more than 843,000 financial services clients. ATB Cormark Capital Markets is a leading North American investment firm providing holistic corporate and capital markets advice and full-service financial solutions. Visit atb.com/inthemoney for more information. We have one from you, Bill. You've brought Fifth Third Bank. So we've talked a lot, about banks, how you bought the financials in the crisis. Something interesting is happening with these regional banks. They're starting to outperform.
Yeah. Well, here's what's interesting is this crisis with UnitedHealth is following a very similar pattern to what happened when Silicon Valley and First Republic Bank in March of 2023 went into the dark hole. It's funny. I had a friend call me a couple of days after that. He said, Bill, I had $2 million on deposit at Silicon Valley Bank. What's going to happen to me? And I said, oh, it's very simple. You're going to get $250,000 of that back, and you lost the rest of it. Okay? Now, what happened was they ended up standing behind those deposits, letting somebody else buy those two banks, and by the way, that's the most inflationary thing that's maybe. I mean, we've thrown $10 trillion at COVID. We're doing all these stimulative government things, but that was a big time sin. I mean, but anyway, so the stocks of the regional banks plummeted. Well, we didn't know enough. That's what I thought was going to go on, is he was going to lose $1,750,000 from that. So we didn't want to touch it then. So it ended up, they stood behind it and they rallied. And then in November of 2023, there was a retest. Like UnitedHealth,
people got scared on the economy.
Like UnitedHealth is doing right. They got scared of the economy, they got scared of that. And so we did some research. What we were looking for was strong balance sheet, very meritorious regional banks that were boring. Okay, we wanted boring. And so we came up with three. Western Alliance, that's doing a lot of great things in our area, but they operate in almost all across the country in various businesses they're in. We came up with Fifth Third, and we came up with M&T in Buffalo. I mean, what could be more boring than being in Buffalo? So anyway, so Fifth Third, so we put 1% in each of them because their capitalizations were so low, they barely qualified to be in a large cap value portfolio. And what's happened since then is Western Alliance has done great, and Fifth Third has done great, and then Fifth Third announced recently that they're buying Comerica and
you like that deal?
And we really like that deal.
It was good enough that Holdco, one of the activists on it, were screaming from the top of a roof that they were, taking advantage of Comerica shareholders, and so we think they got a really good price based on what we read in that deck.
And when you buy a bank, there's like a 15-person executive team that is instantly unneeded. They don't need
synergies.
So this is back to the cost-saving synergies, like the oil businesses we talked through in a prior time with Meg. Just go look at SG&A. Yeah. You're going to wipe a lot of that SG&A. The other thing, the tech stack in the banking business is a big deal. So you're taking all these scale, you're putting it together. It's just a scale game.
And we think that same thing's going to happen in the U.S. oil companies. There's going to be a lot of consolidation.
Same kind of SG&A idea with the banks.
That's why you like APA. You mentioned
we like APA.
They have $350 million of SG&A at APA. And when you go talk to the folks at APA and say, hey,
it's like expenses, selling general.
Yeah, just cost to run the business. And when they bought Callan, we said, hey, how much did it cost to, in SG&A that you kept on? They said 0. Yeah. And it's like, okay, so if someone comes in to buy APA, I don't know, let's get it down to $100 million of SG&A. Well, let's run 5 to 10 times.
So you think APA is a target?
They should be. They have the offshore.
Well, and then Chevron attempted to buy Anadarko back in 2019, and Oxy outbid them. So if you look at today at $40 a share, with Buffett owning 28% of Oxy, you're getting Anadarko and Oxy for about what they offered to buy Anadarko, practically.
Yeah.
And to their credit, Exxon and Chevron have told President Trump that it's pretty hard for us to justify our shareholders investing in the oil business in a country that fleeced us out of tens of billions of dollars, right?
Which is Venezuela.
They confiscated their. So anyway, it wouldn't take that much if you stay around $70 a barrel, there's going to be a lot of consolidation.
Yeah.
I just want a point of clarification because you kept mentioning UnitedHealth. Is that a name that you're getting involved in?
Yeah, we just got involved in it recently.
Yeah,
in the fourth quarter.
Yeah, we put 2% of our portfolio into it through the end of last year.
And why that timing? Because the stock's been under pressure for some time.
Yeah.
So you've been watching it under pressure.
But it's all the way down to where we bought it.
Oh yeah, so I want to know.
We don't buy stuff for how we're going to do it 6 months.
No, I know.
We buy stuff for how we're going to do it in 10 years.
My point is you've been watching it under pressure, and then you only recently decided to step in.
No.
In the fourth quarter, we started buying.
We bought it last year.
Yeah, late last year. Yeah.
Yeah,
and last year, but it's been just so you know, since April.
Yeah, we had looked at it 10 years prior to. We looked at it back in 2016.
We've been conscious of it for years because it's been a super well-run business.
Yeah.
And they provide products and services that the United States government cannot live without. And
so, do you think it just goes back to 600?
No.
They're going to earn less than they did in the past. We think they'll learn.
It'll go back there someday. But
it's going to take time.
Let's face it, if the S&P 500 loses money over the next 10 years and UnitedHealth knocks out counting dividends a 7% compounded return during that time, it's going to be a great thing, though.
Its multiple is going to rise.
I can't resist a buy the dip opportunity, so I had to follow up on that.
Well, it's back to where we originally started, so you can imagine what we might be thinking.
Okay, that you might add.
We'd like to see the insiders, though. Helmsley bought. That's what originally got us involved. So
yeah.
Okay, Cole. We're running out of time, but I want to get your picks out on the table as well.
Okay.
We know what you think about Adam Waterous.
Yep.
I think at this point.
Yep.
Strathcona, though, it has really, after failing in its attempt to buy Meg, did the special dividend. Naturally the stock comes under pressure.
Yeah.
But even then,
Yeah.
it has underperformed the broader energy group.
Yeah.
What's going on?
Yeah, so they paid out their $10 special. I think the high in the stock was around 42. So you think $10 net of that was at 32 then.
32.
You're 26 today. So I look at that as it's pulled back to a point where it's very attractive compared to a lot of things out there. Here's what I would just say.
Why is it lagging when everything else is doing well?
Well, they just had a lot going on, and they'd really re-rated from where they were. I mean, think of how much, don't forget, if you go back to when that came out of Pipestone, that was trading in 20s, low 20s, counting the $10 special. I mean, think about that for a while.
Yeah.
So as we look forward, it's okay, has Adam said everything that he was going to do and been very forthright and direct? I mean, I even remember when people were like, oh, is he really going to pay a $10 special? Is he just going to lie to us? Well, under securities law, that might be tough, but I don't know. So I say that because he's done exactly what he's told people he's going to do. Now, do I think what they got in their purchase, their related party transaction with Cenovus when they took over that Saskatchewan asset, I think they stole that from Cenovus. But I think Cenovus needed to do something to do that. So I say that because I think that value is worth a lot. The value of that asset they bought is worth a lot in Saskatchewan. So I think we'll see that. But you're going to see a company go out and grow production. They're going to tell you that they'll grow production less than $30,000 per flowing barrel Canadian to do that. Why are they doing that? Because they trade for $60,000 per flowing barrel.
But what other executive in Canada looks like Robin Williams? I mean, think about it.
Yeah, that's true. Okay, we've got let's try and do this in 2 minutes.
Okay.
But a name you haven't, have you discussed it yet? West Fraser?
Yeah, we own West Fraser.
You own West Fraser, Canadian lumber. Tell me about why are we buying Canadian lumber?
So we've actually owned it for a decade. Okay, so back to policy, back to Bill's point on UnitedHealth. We love when government gets involved with business because they tend to be bad at business and create opportunities for investors.
Okay, so you're up if you've owned it for a decade.
Correct. We've owned it that whole time.
A real sideways trader for years.
Well, correct. So we started in the 60s in 2017, back when the softwood lumber dispute ended. Tariffs were coming up back then. So you buy a stock in the 60s. It goes to 140-ish at its peak. And you wake back up at 96 roughly today, and you think, well, I went from making incredibly good money to making okay money, okay? Now, that being said, when does that business create two times it can be incredible to be a buyer. One, when supply is coming out of the industry, which is what you're seeing curtailing supply. That's always very bullish because price regulates price, or low prices always cause high prices in the future. That's one. Two is, if there's one thing that I'm going to get down on my knees and say, dear God, I'm in the lumber business, what's the one thing I really want? Jim Pattison open market purchase, because he did that back during COVID in the depths and depression back then that the housing business was thought to be in.
Yeah.
He did that obviously in West Fraser stock in the open market. And so I say that because Jim has been a great counter-cyclical buyer. He's a very old person, nowadays from what I heard, I've heard he's not that active compared to what he used to be. But that's the one thing I'd really want, is just a lot of insider buying, and Jim would be a great person to do that.
And Cole's very familiar with the fact that I was in Seattle for 40 years, and I used to tell people the two worst performing stocks of my time in the investment business in Seattle were Weyerhaeuser and Puget Sound Energy. Puget Sound Energy used to run commercials telling people to use less of their products.
Natural gas.
Yeah.
And it's like, why?
Well, and electricity also.
Yeah.
And then Weyerhaeuser has the most fabulous farming operation practically in the world, right?
For trees.
They farm trees.
Yeah.
And all they care about, there's like now probably 120 heirs or 160 heirs that get fed dividend. They live off the dividends off Weyerhaeuser. So they run it like it's only
a trust fund.
It's a trust fund stock, and
so he really had to sell West Fraser to you.
Well, no, it makes complete sense.
We own the home builder, so a lot of this is to do with housing. So if housing's in a tough spot, the lumber producers, that is their swing producer in effect, is U.S. home builders.
Yeah. Yeah, so the point is, if Jim Pattison was running Weyerhaeuser, we'd probably buy the stock.
Maybe.
But he's not a young man.
What are you up to?
But he's not a young man.
Yeah,
there needs to be a mini Jim.
Well, you've got a mini Bill over there, but you're still a young man, Bill. Thank you so much for your time and your insights, and for having the show in Phoenix. I really appreciate it.